Welcome to the Property Couch, where each week you get to listen to two of Australia's leading experts. Bryce Holdaway, co-host of Location Australia on Foxtel's Lifestyle Channel, co-host of Escape from the City on the ABC, and partner of Empower Wealth Advisory. Ben Kingsley, chair of Property Investors Council of Australia and the founder of Empower Wealth Advisory, named the 2018 and 2019 Property Advisory Firm of the Year. Stay tuned as they bring you the insider's guide to property, finance and money management.
All right, folks, welcome back to the Property Couch podcast, and welcome back to you too, mate. How are you?
G'day, mate. How are you going? Hey, I'm really excited about today's show. You know
why?
One, well, obviously, brand new super guest, unbelievable.
Yeah.
But I also think that I could argue that this is what's making property news. So, in other words, I haven't really prepared anything, but I've got something to say. Don't worry, I'll put something at the end. But really, this whole segment is about what's making property news.
This guest today, you've been waiting your whole podcast career for this guest, right? Because that just means you don't have to prepare for the end. So,
well, but also the insights are incredible. We've been fortunate enough to get there and have a listen, so it's been great.
Yeah, no, stick around. This is a rock solid episode, crew. You are going to love it. But before we get there, Ben, just want to shout out to our community. Thanks to those people who have put their hands up to be part of our summer series, Ben. A number of people across a range of demos and a whole range of walks of life we've got covered. So I'm super excited. I cannot wait to share these amazing stories. So just letting everyone know, thanks for reaching out. Ivis has gone through that, Ben, and we have got a ripper summer series coming up as well. But you hinted that we've got a very special guest today. We do. Before we get there, I've got a Mindset Minute theme that is around having this special guest here today, Ben. But everyone loves to pull out their favorite Warren Buffett quote, Ben. I'm sure you could riff off, be fearful when others are greedy and greedy when others are fearful. When the tide goes out, there's all these platitude ones for Warren Buffett, but this is one that you might not have heard him quoted as much. It's better to hang out with people better than you. Pick out associates whose behavior is better than yours, and you'll drift in that direction. I've built a life around making sure I surround myself with people that are better than me, including yours truly and the Stig, Ben, so I can drift in that direction. But the reason I wanted to do that one today is because our very special guest today has got some amazing insights. And so just by nature of people having us in their earbuds today or in their car speaker or wherever they're listening to us, Ben, they get to fulfill this Warren Buffett quote of you will drift in the right direction. So we have got some amazing insights coming up from our very special guest. We are talking with Dr. Nicola Powell. We spoke to her a little earlier. Let's cut to the chat that we recently had with Dr. Nicola Powell. All right, Ben, we've got a very special guest today. We are chatting with Dr. Nicola Powell. She is the Chief of Research and Economics for Domain and one of Australia's leading property market experts. Nicola has over 15 years research experience. She has a deep understanding of the Australian property market and has focused on property and demographic trends for nearly 10 years. Nicola is the leading force behind Domain's regular data reports that keep the Australian public up to date on what's happening in the market. Welcome to the Property Couch, Nicola.
Hello, thank you so much for having me.
Oh, it's a pleasure. First time on the couch. We're super excited to chat with you, but you are clearly at the top of your game, occupying one of the preeminent positions in this country around property commentary. But that wasn't always the case for you, Nicola. So can you take us back to the very beginning and let us know how it all started for you? How did your professional career kick off?
So I have a science background, and so I've got a degree, I've got a master's, I've also got a PhD, but it was very much in the science research. So I was studying genetic pathways, molecular genetic pathways. So it was totally a different career start for me. But with science, it's very much driven by data. And that was a core of my training, is understanding data. What is that data telling us? And how can we use that to make decisions? And how can we create it to be insightful? When I finished my PhD, I pretty much realized straight away that it wasn't the world I wanted to be in. And I had this love of property. And I was very lucky to get a break from a certain individual who gave me an opportunity to dive into their data which was property. And since then, which is the last 10 years of my career, all I have done is look at property data and demographics. So, I've really focused the last decade of my career in property and, harnessing that research and that data training and putting the property lens on it.
Now, Nicola, in terms of that, we can hear a little bit of an accent there. So we've come from somewhere overseas. I think that's an English accent. I'll hopefully be safe in saying that. Was that story in England before you came to Australia in the property space, or how did you make that transition over to Australia?
Yeah, so I came to Australia 10 years ago, and that career path changed for me when I came to Australia 10 years ago. So I've really focused, the last 10 years on just the Australian property market. Obviously, I dip a little bit of interest in global property markets because I think, if you're into property, you're very much interested, particularly during COVID, around the reactions of the global real estate market to a pandemic. It was when I first came to Australia that I made that transition. And I started out by starting my own business and doing consultancy, and then that morphed into and just grew and grew. I think it's really interesting, when I talk to people that are starting their career journey, you realize when you find something that's your passion. And I am very privileged to do something that I absolutely love.
Before we push record, we were chatting about the fact that you also like the behavioural side of things. So it's very data driven around the numbers and everything that you see. But you also like to add some behavioural economics to it as well. So how did that interest sort of merge for you, and how does that serve you in your role, what you're doing now?
I think we're really lucky at Domain because we're exposed to a variety of different data points. So not only, the kind of big picture macro and also micro kind of economic drivers of property, but why are people doing what they're doing? So we see where they're looking, what they're looking for, what are they typing in and searching for? And, I think understanding why are people behaving in a certain way, why are they doing certain things when it comes to purchasing property, I think is an extremely insightful, and it's been very insightful over the last, nearly 2 years since the pandemic hit. So, I think looking at, you can understand, and it allows you to dive in and understand kind of changes. So we've done some analysis around what people have been searching during COVID, what were they actually searching for prior to COVID, and how has that changed? And it gives us an understanding of pain points. As you can imagine, affordability has been really one of the things that's come out over the last 12 months around, things like duplex, subdivisions. It's shifted away from kind of units and apartments, and people are actually wanting their own bit of dirt. But obviously buying a large single residential block is a financial constraint for some people. And so what we've seen is the word duplex, subdivisions, semi-block are all top keywords that have seen an increase in use since the pandemic.
Well, let's lean into that shortly. But before we do, let's go back to the mission that Ben and I are on is to get people talking about money over the dinner table. So can you tell us what money discussions were like for you growing up? And by extension of that, I know you've got young children yourself. What are money discussions like over the dinner table in your household?
Yeah, so for my own childhood, money discussions probably weren't there. And I think that is probably just the personality of my beautiful parents. But what that allowed me to do is to think about how I'm raising my own children. So I have a 6-year-old and a 2-year-old, and I have conversations. Obviously, my 2-year-old is too young, but I have conversations with my 6-year-old about purchasing a home, and he's only 6. So his dream is he's going to buy the house next door, and we're going to build a zip line so he can come over for dinner and come through. How great is that? But, he's got his savings jar and he knows that savings jar is to purchase a house. And look, it's got, I think a couple of $100 in, but that's not bad for a 6-year-old. he does certain jobs at 6, very small jobs, and gets a little bit of pocket money for doing those jobs. But it's the understanding and the exposure of, it's really interesting, we're very much a cashless society. And, when my son was a little bit younger, his perception of this card, and that he didn't actually understand that this is why mummy and daddy go out to work, and this card is actually how you spend money, and actually opening his mind to that has been really an interesting learning curve even for me. But as you can imagine, I'm very much property orientated, and that's what I'm trying to expose him to.
So Nicola, the idea that your parents were a closed shop in regards to money management, how did you develop your own money management solutions and organising your finances to be where you are today?
Yeah, so my parents were very risk adverse. They were probably from that era where they just didn't like debt, they didn't like credit cards, and they're still like that today. And I think it's really interesting what you learn from your own parents and how you carve your own way. And I've learned a lot from my husband. So my husband's an entrepreneur, and I'm probably risk adverse because that's how my parents have brought me up. But I have an entrepreneur as a husband who is very, he leaps into risk head first. And so I think, he has helped me very much to be financially independent and make my own decisions. And I think, take those calculated risks is probably how I like to approach things.
And if you think back to if it was a conservative parents that you were seeing, and then you went out into the working world at some point when you graduated from uni, how did you make that transition from understanding that you need to manage your own money? Were you naturally able to go towards the budget? Did you spend a lot and learn that, hey, this isn't working? Where were you on the spectrum of money management when you were first looking after it for the first time yourself?
I moved out of home when I went to university. So I moved out when I was 18 and became, the controller of my own budget from then. And I think it's just something that I'm naturally good at, is that I can budget well. I worked multiple jobs when I was at university. That risk-adverse upbringing, I didn't get credit cards like many of my other friends, and this spiraling of into debt, which can occur when you're at university. So I was always working hard, working multiple jobs. And yeah, I think that conservative upbringing actually helped me to budget well, not take on too much debt, that is, relevant to your age. And so, yeah, I think I've always been a hard worker. And that's probably because I've seen my parents working extremely hard to bring us up as well.
That's a great sort of way to finish off on the money side of the story. Now we're getting into property. This is obviously our domain as well. We absolutely love this. So give us a read in terms of, you've shared a little bit about the sort of the change of behaviours and obviously what we're seeing around apartments and sort of what I would say enclosed type living versus this desire for land. Tell us a bit more about where we're at right now in terms of that property cycle, the way in which the data's showing up for you, Nicola.
Yeah, so we released our quarterly house price report only last week. So that was on the September quarter. And I think, we've got a 30-year time series of price cycles across all of our cities. And we go from, the Australia-wide capital cities down to suburb level. And I think what's been really quite stark during the pandemic is how well our property market has performed, considering when you think about what those forecasts were from various banks at the beginning of the pandemic and how, all of them were suggesting that prices could fall, and it's been the flip reverse. I've seen nothing like it before in terms of rates of growth. we saw at the beginning of this year, the level of activity in the housing market, the rate of price growth that we've seen. Sydney house prices over the early part of this year were at one point in time growing by almost $1,200 a day. That is an extraordinary amount of growth. I think for me, what's been interesting in the most recent quarterly report is we're starting to see that growth cycle slow down. We've very much seen stronger rates of growth for houses versus units, and that has been something that has earmarked the upswing during the pandemic. What we're now starting to see is, for example, if we look to Sydney, we're starting to see momentum build in unit prices. But overall, what we have seen is the pace of quarterly growth has eased. It's nothing near where we were seeing earlier in the year. I think we're seeing some of that demand come out. And one of the key things for me over the September quarter is, we have seen demand run ahead of supply. It's, there's classic, demand and supply story. We saw a high level of activity earlier in the year. What we've seen is all of our cities now, I would say, apart from, say, Brisbane and Hobart, we're starting to see current supply lift, which means we're now seeing new listings come onto the market quicker than they are being purchased. So particularly in Sydney, we're seeing that total supply lift from the multi-year low that was hit back in January earlier this year. So I think what we're going to start to see now is buying conditions are going to improve. We're still going to see price growth, but what we saw was, it's like in the pressure cooker this year, and we've seen a bit of steam come out of the housing market. When you have a look at, say, clearance rates, which is a really good, timely, frequent indicator of the health of the property market, in Sydney, Melbourne, and Canberra. In Sydney, we've seen those weekly clearance rates now dip below 80% for 2 consecutive Saturdays. And, we were continuously seeing them above 80%. So what I'm expecting now is we'll probably continue to see those clearance rates be a bit softer. I think we are going to see supply pick up. We've started to see it pick up. It jumped over October. And I think we've got less demand overall in the market compared to what we were seeing earlier in the year.
Nicola, is that consistent with what's happening in Melbourne? Obviously, what was extraordinary through that September quarter was you couldn't actually even go and see properties, yet transactions were occurring. Are you seeing something similar in Melbourne, or do you feel like Melbourne's been hamstrung and now it's coming out of that period and we've still got some strong pent-up demand there?
The latter part. I think if I was going to pick any city that's got a bit more room for growth, that would be Melbourne. Classically, when you look at the price cycle, Sydney and Melbourne follow each other quite closely. What we've seen is obviously Sydney has provided much stronger rates of growth. I think what we've seen in Melbourne is a greater element of pent-up demand and supply, and we know that becomes unleashed following once those lockdown and restrictions are eased. And, that has built up much greater in Melbourne because of the stricter restrictions around being able to inspect real estate. So it wouldn't surprise me if we see much stronger rates of growth coming out of Melbourne moving forward compared to what we've seen in Sydney. I think Sydney's much further along the growth cycle than Melbourne.
Nicola, what's the message that you suggest to Sydney people who are listening to this? Is it more a case where you and I'm talking more about your behavioural analysis here, but do you think that Sydney people will get resigned to the fact that they may just be long-term renters, or do you feel like they may be at that pivot point where they'll look across the borders and say, well, I'm gonna relocate myself to Brisbane or Melbourne or Adelaide or wherever it is, given the pandemic is clearly giving an opportunity for people to do that. What's your sense of Sydneysiders who can't get into the market? Will they stay put and rent, or will they cross the borders?
So I think there's a couple of parts to that. Firstly, this idea of renting, I really truly believe that there's going to be a portion of our population that are going to be lifelong renters. Now, that could be through choice or it could be forced due to affordability. There is going to be a portion of our population that's going to want to rent for their lifetime. And that is a choice, because I think there's certain people that like that transient nature of being able to move more easily than purchasing property. And, I know people where their biggest asset is not a home. They haven't purchased a home. They actually invest in the share market. And that's their way of building their own personal wealth. The second part to that is, I think the sheer affordability has been an issue in Sydney for such a long time. We're already seeing people move interstate because of that affordability aspect. We were seeing them move into regional parts, but we were also seeing them shift to southeast Queensland. So, we've seen that internal migration. If any state has been the one to benefit from the movement of people across the state border, it has been Queensland, particularly that southeast Queensland. Some of the rates of growth in some of those suburbs has been astronomical, in those lifestyle pockets. What we were seeing, though, in terms of that movement out of Sydney is that it was happening prior to the pandemic. It was gaining traction since around 2015, and that kind of aligns to that acceleration in price that we were seeing. But what the pandemic has done is it's accelerated a trend and a movement away from Sydney that was already there anyway prior to the pandemic. And what I think the pandemic has done, it's always been the unlock to affordability for some, because it means that for some people who can work from home, it means that they've been able to move elsewhere. If they aren't able to work from home, I think what the pandemic has done, and it goes back to that behavioural side, it's made us all place a focus on how we're living our lives. And I truly believe that Australians are driven by lifestyle. And I think if anything is going to put our lives in the spotlight, it's what we've all experienced over the last couple of years. And I think people have made those life-changing decisions. They've used this time to harness that, move elsewhere, whether it's renting, that try before you buy, because we have seen a boom in rental markets, and particularly in regional and lifestyle pockets. But I think people have used this time and they have relocated out of big cities. And I think the affordability aspect is such a barrier for buyers. First home buyers, obviously, they're battling escalating deposit goals, and on the back of low interest rates, they've got poor interest on their actual savings. But I think what's interesting now in Sydney is that I think it's affordability biting not only for first home buyers, but those looking to upsize, because I think what we're seeing now is a general pullback of demand overall. And I think people who are, looking to upsize, they're doing the sums and realizing the leap once you factor in stamp duty is just too much. And I think the two together is helping to pull away some of the demand, particularly in Sydney.
You mentioned unit prices earlier. How do you see that? Because in your report, there's, I think Brisbane was the largest discrepancy between houses and units. You probably correct me if I'm wrong, but across the country, you've clearly seen this acceleration of house prices where the unit prices haven't caught up. Is it now the time for some of these better assets in the unit space, and I'm talking more lower density rather than the medium and high density, there has to be an opportunity in that space now, given that price discrepancy is so large, that people just by nature of what the bank will lend them will have to start looking at these asset types, and therefore the demand equation will put the positivity towards price rises in that segment.
Yeah, so we've still got a record price gap between houses and units. But I think what we're starting to see is a bit more of an acceleration in unit price growth. We've definitely seen that shift and that preference to single residential townhouses, that lower density living, particularly in the outer or mid and outer suburbs of our main cities. And I think as well, last year we had a pullback of investor activity. We know investors obviously prefer units as their preferred property type. I think though, what we might see, and it's exactly what you said, moving forward is, I think units obviously offer that affordable housing for those that are just sheerly priced out of purchasing a house. And I think what we're likely to see is that price gap will start to narrow, because I think there's a perceived value in units versus houses because we haven't seen that growth. But I think there are some caveats around that because, there are certain areas where there are certain units that are specifically targeted to kind of owner occupiers. They're in those highly sought after locations. Northern Beaches is the one that springs to mind, where you've got this astronomical house price growth. And it's really interesting. So we look at, say, views per listing by price point. And one of the shifts that we've seen is you can visually see that buyers are being priced out of purchasing a house, and then they're starting to look at the upper end of the unit market in that particular area. So you can see that shift moving across because of that affordability and that, as you said, what they're able to actually get from the bank in terms of their mortgage, and what they can afford now in a market that has seen rapid price rises.
Because I think if I have a look at the Melbourne market, because the Sydney market's always been a bit more mature when it comes to unit prices, just given the geography and the waterways and the amount of people and the Blue Mountains and all those sorts of things. But if you think about Melbourne, people were buying units in the southeast of Melbourne because that's the Fertile Crescent, that's where everyone wants to be. But there was a bunch of people that said, well, I can still actually go over the bridge and I can go into the inner west and buy a period home and put some money into it. But if you now look around the Melbourne marketplace, it's very difficult to look for that opportunity now to get the housing, which is why I think that the maturity of the unit market in Melbourne will start to have some of the similarities that you see in the Sydney market, whereas the other markets around the country, particularly Brisbane, it's everyone going to Brisbane, they want a house, and some of that unit market still has a bit of maturing to do. So I think it just becomes a maturity of the city as to where the actual house sprawl is gone and the house price is gone, where people are just stuck where they're going, gee whiz, I don't necessarily want to go that far away from my family. I just by nature have to make decisions around whether it's a townhouse a townhouse first, or then a villa unit, and then ultimately they'll make a choice with the apartment. So it really comes to the maturity of the city. Nicola, do you agree?
Yeah, and I think as well, it's that compromise. It is how you were describing that compromise of what is somebody willing to compromise on. Is it location? Is it property type? Is it the number of bedrooms? Is it the commute? Once we obviously get back to the office. So yeah, I do, and I think when you look at our different cities, and when you look at Melbourne, some of those, and what always surprises me about Melbourne is Melbourne's had a lot of development in recent years. And, it's had the longest lockdowns of any city in the world. And yet we've still got record high house and unit prices in Melbourne. And that can't be said for every other city. I mean, Sydney's just got another record unit price over the September quarter. So it just surpassed its 2017 previous peak, which shows, how that is, the price cycle is moving there. And even when you look towards Brisbane, for example, we know that that's been in part, particularly in the CBD, an oversupplied market, and it's been trying to find its balance. And I think we're starting to see that. We're starting to see that additional supply be absorbed. And I think the thing with Melbourne, it's the population growth that Melbourne's had, particularly from overseas, that investment activity that's helped to continue to absorb units in particular in inner Melbourne. So I think it's going to be interesting to see what happens once we see borders reopen and that population growth from overseas resume.
I think this is a fascinating study, and I really love the idea of what you're talking about there. For those who have been with the podcast for a long time, we've talked about this in terms of the decisions that you have to make and the compromises you have to make, right? And for you to give us evidence on the platform, on Domain's platform, that they're moving from a house price point and then changing their property type, not changing their location, is quite a fascinating study of that human behavior that we're talking about. So Nicola, this leads to my next question, because we are super fixated on what the value of our property is today. The better question we should be asking ourselves is, what is our property going to be worth in 2 to 3 years' time? So this is where I'm going to ask you to get your crystal ball out. And I want you to talk to me about the views of the pandemic and how that has moved people to regional areas, but also having that view of the opening of borders and that immigration that's going to come in. Where do you see that underlying demand and that behaviour start to take shape across Australia?
So I think the whole regional move has been, one of the things that has been a key standout trend since the pandemic, and that is affordability, is that lifestyle. Australians are driven by lifestyle, bang for buck, what you can afford to buy, and also the ability to work from home. And I think part of that regional move is likely to reverse once our cities once life is back to whatever our new normal is going to be. Because I think, we've seen such strong demand in the rental market, and the rental market obviously is much more transient. So there is going to be an element of reversal of that. But I think we are going to be very hard pressed to convince millennials that we need to be in an office 5 days a week, when we have proven for a long period of time that we're all very productive at home. And I actually think this is going to change our consumption of homes, of dwellings. It's going to change how we use our office space. And I really think that our office space is, we will be going back into the office, but it might just be that 2-3 days. And the office will be where the deals are done, where we collaborate, where we work together. And our home is going to be where we can do the concentrating, written work, the analysis, if it was me. So I think we're going to use our homes differently. And I'm probably going off on a tangent, so rein me in.
No, keep going.
But I think, I find this whole consumption of our homes and how we've used them, study became such a frequent key word, and home office as well. Home office wasn't used really prior to the pandemic, and it's almost become this buzzword of the pandemic. And so I think how we use our homes and how it's going to come out in architectural trends is going to be a really interesting space to watch, because obviously we had very open plan homes. And I think what we've all realised is we need that interchangeable space. We need somewhere we can shut the door. We need somewhere where we can sit the children and do their homework. We need somewhere where we are able to work from home. And many of us have been juggling doing all of that at the kitchen table, and we're in these very open plan homes. So I think, the importance of having an additional bedroom, we've seen that come out in that behavioural search. I think that's going to continue. I think architectural things are going to change into the future. One of the other little nuggets that we've seen in terms of price growth is price growth has been greater for houses compared to units. Price growth has also been greater the more bedrooms a home has, irrespective of property type. So the more bedrooms a unit has, the greater the price growth. The more bedroom a house has, the greater the price growth. So I think if anything is going to show a trend, that in itself really speaks to what we've seen during COVID.
Yes, it was interesting. I saw a lot of research in the late 90s and early 2000s about how, the McMansion home is not going to be a thing of the future, and we're going to go into smaller and smaller condensed type housing. And part of that is part of that affordability story, but it is interesting now the pandemic has changed that. One final question I have in regards to some of the research you're doing. One of the other reasons for these lifestyle areas where they did carry risk was the aging population that went out there. So for two factors. One is that they're not on a higher income, and two, obviously, as an aging, we'll get a bit morbid here, but at some point they're going to get unwell and pass away. And so that would also mean that there would be, especially if you've got a big batch of baby boomers going through, there's a risk of having too much supply and not enough of that underlying demand. Fast forward to a pandemic, and we've got this sort of 40-something, 30-something people moving to these regional areas, and that's taking a little bit of that risk out of the market. Have you done any sort of analysis on income and aging profiles in some of those lifestyle areas?
Yeah, so we look into all things, and what we've found is it's people that are prime in their working life. And that's the difference. They're prime in their working life. They're moving to these regional areas. They're moving into Southeast Queensland. Actually, that's been one of the biggest drivers, moving into Greater Brisbane as well. But they're prime in their working life with a family in tow. They've got a couple of kids. And I think that's the difference. And that's a young family is going to want a different type of dwelling to somebody who's in either pre-retirement or going into their retirement years. So that, changes the dynamics and demand in a particular area. So, I am keen to see whether we continue to see that type of trend in a more post-pandemic world. And I'm also keen to see what happens once international borders reopen. We know that overseas migrants, they tend to rent upon arrival. They go into Sydney and Melbourne, they go into the CBDs. Is that going to be the case moving forward? I mean, obviously, foreign students are going to be concentrated around those universities, but will we see that trend disrupt slightly? Are we going to see the increase in the desirability to be in those regional areas?
What's your best guess on that particular question? Do you think they will, or do you think they'll stay with what they know in the cities?
Look, I wouldn't be surprised if we see a little bit of that occur. I think my gut probably is saying that it's probably going to be largely driven by Australians, the Australians that are really driven by that lifestyle and movement out. And I think as well, it's going to be affordability that's really going to be the key. And I even in markets like Hobart, which is extremely unaffordable for locals, you've got that much greater growth in regional Tasmania as well, and that movement of residents. But I do wonder whether part of that overseas migration, obviously foreign students, as I said, will be in those academic hubs, but we could see, others choose to be in outer suburbs or that sweet spot, the sweet spot around our cities, which allows a bit of a commute. And I think that commuting belt has increased, particularly if we do adopt this hybrid moving forward. When you think about, how our cities have been planned, and, that commuting, it has been generally about 150 kilometres from a CBD, that may increase slightly, and that captures more regional areas that could benefit from those commuters that go in 2 days a week.
You talked about the part regional reversal. Does that form part of that for you, that commuter belt, which we've talked about previously on this podcast, where if that does stretch from 150 a bit further out, do you see that the people within the 150 kilometres, that's probably the sweet spot for that, and then outside of that? Because if you think about some regions that are like, just think about Warrnambool here in Victoria, that's a significant commute to the CBD, but it has an amazing lifestyle down there. It's got the beach, it's got so many beautiful natural wonders there, and so right now it's fine, but there will come a time, and you've hinted at it, and I'm interested to know what sort of categories or definitions you kind of have around that part reversal. Is it purely the commuter belt, or is there other things that you're putting into the mix there?
Look, I think those that have chosen to rent and go into these lifestyle areas, I think that's the element in terms of reversal. I think it's not, when you see somebody move and they're purchasing, that's a much more permanent decision. It's those rental markets that have all of a sudden seen their vacancy rates drop. You've seen rents skyrocket. They're the areas that will see that part reverse. They're the areas where you'll probably see people go back. They've done their gap year or however long that it has been, and they're going back to the city once, we're back to normal. So, and it's interesting you say Warrnambool. That is a name that an area that continues to pop up in conversation. It's been one of those areas where we've seen it as well in terms of demand levels and where the interest and where people are looking for. I mean, when you look to, say, Mornington Peninsula and some of those suburbs, Summers, for example, where we have seen, 40% upwards in terms of growth over the last 12 months, astronomical levels of interest. We know those areas have always been popular for, city dwellers having their, seaside pad. But I think, over the pandemic, it's just been accentuated in terms of that level of demand.
Now, Nicola, we know that demand is effectively a product of people's ability to be able to borrow money. In the vast majority of the cases, we all can't pay cash. So if it is a product of that, and we know interest rates going down increases borrowing power, what are the catalysts for you? Obviously, we've talked about an increase in listings. So that's improving the supply side, moving the equation back into the middle, because it's definitely been a seller's market. But let's talk interest rates and let's talk APRA in terms of Macroprudential. What's your read on that in terms of Governor Lowe's announcement? Thank God he stayed firm on lower for longer. But what's your read on what's going to happen on the demand side around interest rates and borrowing power and what APRA might do?
Yeah, so obviously we had those macroprudential measures coming in place on the 1st. And really, in terms of the toolkit that they have available to them, it was a very small tinker. And I can't imagine it having a huge impact. It's going to, impact the marginal, extreme kind of borrower, highly leveraged borrower. I think my concern came with that around those borrowers that have to be highly leveraged in high-priced markets, such as first-home buyers in Sydney. We could see them being impacted slightly by this. But I think it's more what's going to be their next move. And I think if we see them making another move, it will be a more substantial move. But I think what we're starting to see now is heat is coming out of the housing market in its own kind of natural dynamics anyway. So it may not need any further measures being put in place. And I think with interest rates, I'm totally in agreement with you in terms of, we have that, he was very strong. Dr. Lowe was very strong in terms of interest rates are going to stay low. Interest rates are going to move higher. And I think at some point, we've got some people predicting it's going to be next year. I'm probably more in the camp of 2023. I think it's going to be sooner than what was initially expected. I'm thinking 2023 for those high interest rates. But what's going to be, we've got our housing markets coming off of their growth cycle in terms of they're still rising, but we've passed that peak rate of quarterly growth for Sydney. I'm certain of that. And we are going to move into a different stage of the price cycle. Now, that stage of price cycle is going to probably coincide when we've got interest rates moving higher. And I think, we've also got to consider where supply is, and supply is rising. And we've had largely zero population growth other than natural increase. And I think it's those supply and demand dynamics that we're going to have to watch into next year, particularly if, say, we do see interest rates moving late next year or early into 2023, because I think the conversation is most people are going to be saying the market is plateauing because we've got rising interest rates. But actually, it's going to be more, I think it's going to be more of that classical supply and demand. We've actually got increased supply, and then you've got the weak population growth finally filtering through into the demand side of things. So I think that's going to be a key differentiator of next year and into 2023.
And my final question around interest rates and what is the trigger for that movement? Are you seeing that an argument of inflation, or are you seeing that an argument of real wages growth, that the RBA will get there in terms of changing real wages growth, or will their hand be forced based on an inflationary pressure that might be flowing through?
Look, I think it's more the inflationary pressure. And I think when you read the details of, that come out of the RBA, reading between the lines, I think that's the key thing. They really are focused on actual inflation being in that 2 to 3 target range. I think it's going to be an inflation story.
Well, let's hope we get that growth story of wages before the inflation gets too heated up. That's fantastic. Now, in terms of taking a look around the markets, where do you see risk in terms of irrational exuberance that's playing out in the market? Do you see, some markets have probably had their stronger run versus other markets? What's your read as we go around the nation?
So, look, I think if I was going to pick a market that's still got room for growth, for me, it's going to be Brisbane. I'm probably in the camp of many people there. But also Melbourne, I think there is more room for growth in Melbourne. I think the risk with Melbourne is, a lot of the, it has such an exposure to overseas migration, which is obviously a high risk in Melbourne. And obviously that exodus to the regionals is another risk in Melbourne. But in terms of growth cycles, and you look at the historical performance compared to Sydney, there theoretically should be more room for growth. I think if I was going to pick out any market that I personally was going to go and purchase in, it would be Southeast Queensland, just because obviously you've got lifestyle, you've got affordability, you've got the winning Olympics bid. You're going to have lots of infrastructure spending, and we know that infrastructure spending leaves that legacy. And that legacy is around increased population. It tracks investment activity, and we know that when you've got that big ticket item in the future, it's in the lead up to the gains where we're going to see the benefit for the housing market. I think some of the other markets, I thought what was interesting is Perth. So over the September quarter, we saw Perth prices start to fall very, very marginally. I mean, they more or less flatlined. It was down by less than 1% over the quarter. So I think that could be one market where the risk for me in Perth is what we've seen is, it's had a multi-year downturn. It was coming out of that multi-year downturn, and we were starting to see things improve prior to the pandemic. Then you had the pandemic. And what the pandemic did is it created this barrier for people who were fly in, fly out workers. And so we have seen this increase in demand, and you've seen that turnaround in an internal migration into areas such as Greater Perth. And I think that poses a risk, because once we've got those borders freely open, that will certainly reverse some of those East Coast workers that were fly in, fly out, that relocated their entire families. That will revert. That's a bigger risk for me than anywhere else.
On the demand side, one thing that doesn't get a lot of talking about, Nicola, is household size and the shrinking overall household size, because that's, we've talked about demand being a measure of population growth and your ability to buy, but it's also, it is also that household size, and more people are living on their own. What sort of analysis have you done on household sizes shrinking, and what impact that'll obviously have on supply over the longer term?
Look, this is a fascinating conversation because our consumption of homes has changed. We're having babies later, we're getting married later, we're living at home longer, probably partly because of affordability, but because more of us are actually choosing to go to university. That's the path that a lot of young people take. And that changes how we consume homes and household formation. One of the biggest things in this conversation is the misallocation of housing stock in Australia. So there are more spare bedrooms in owner-occupied homes than there are in homes that are rented. Rented homes, there is a much better allocation of housing. We rent homes that suit our current needs. What we've got is this huge misallocation of housing stock in owner-occupied, whether that's owned with a mortgage or owned, you're buying with a mortgage or you own it outright. And that needs to be disrupted if we really want to address housing affordability. We need to encourage downsizing. We need to think about the cost of transacting a home, because what you find is, we've done research, what you find is that people take 2 steps up in the property ladder because they want to avoid paying too much stamp duty over the life cycle of them purchasing and selling homes. That's a fundamental issue in housing affordability. And if we address that, and if we encourage downsizing, I'm choosing my words correctly, because we've also got to make sure we supply the right type of homes as well. Because one of the reasons people don't downsize is they want to stay in their area, but there isn't the right type of product in their particular area and where they purchase. So it's a bit of a can of worms, I think, really, in terms of consumption of houses. And I think, it feeds into affordability, it feeds into, and it probably will change, because we are seeing that people want larger homes. We've seen that in terms of the growth in bigger homes, irrespective of property types. There is that need. But I think there's the other side as well in terms of the affordability conversation.
Well, there's also the barrier to transact largely being stamp duty. What side of the fence are you on in terms of lump sum up front versus spacing it out over time as a yearly tax?
Yeah, look, I think spacing it out over time as a yearly tax. I think, when you have a look at, say, what New South Wales are suggesting, where it's this kind of hybrid model where you can choose, I think that concerns me even more. I think it would add confusion into the market. And actually, you might start to find, once, you might have, say, investors that want to pay that ongoing, over a period of time, and it could end up segregating the market, because some owner occupiers might want to do the lump sum. But we've done analysis actually on how long it would take you to pay the same amount in stamp duty as it would with an annual tax. And honestly, it would take you 10 plus years really to meet the same amount of stamp duty. So, we know stamp duty, particularly for first-time buyers, is such a hurdle. It's such a significant upfront cost that I think it is something that needs to be addressed. I mean, the ACT, for example, are addressing that, where they're reducing stamp duty and they're increasing rates. It's a long form change over a number of years. And I think allows the market probably to adjust a bit better to it. But yeah, it definitely needs to be at the forefront of conversations.
Now, Nicola, my last question. I could talk to you all day. This is the stuff, you're in my wheelhouse. This is the fun stuff that I love talking about. But my final question comes down to the federal inquiry around housing affordability and supply. Notice how they tag the supply on the end of that. Have you been reading some of the submissions, and have you been keeping an eye on that? And do you have a comment that you'd like to share to our community?
So we actually put in a submission to this. And so our submission focused on the research that we had done around kind of price growth and the demand for houses versus units, because we focused on what the supply was. We actually did a survey and a survey of what is the ideal block size. So what does the Australian public want versus what is being supplied? And what we found is there were certain block sizes that were undersupplied and certain block sizes that were oversupplied. And as you can probably guess, people want their block of land, but it is that smaller size. So what we found in Sydney and Melbourne, the undersupplied areas were, say under 400 square metres. That was what people were really wanting, but was lacked in terms of being supplied to the market.
Nice insights there. Thank you very much.
So my final question for you, Nicola, is with all that you've seen, you're working in your passion. You've seen a number of cycles over the journey. You've obviously seen one of the largest in recent memory. What is your views going forward for people who are listening to this? Because we've got a passionate group of people that love property and see it as a store of wealth. What's your own view on the ongoing ability for residential property in this country to be a great choice for people to store wealth versus other opportunities, equities, and even crypto for a lot of the millennials? So what's your view on property as a store of wealth going forward?
Look, I think in terms of a store of wealth, it's always about the land, isn't it? Where can you purchase? And a lot of that opportunity has now passed in terms of finding those larger blocks of land that maybe you can subdivide, that maybe you can develop on. They're hard to find in our big capital cities. But I think, in terms of, the cycle of wealth and the wealth building, residential property, when you look at the price cycle, they avoid big swings that other asset classes do. And we saw that during COVID. And we actually saw that Australians really valued that more steady rate. Even when you look during COVID, prices did not fall. When you look at what happened in the share market, it was extraordinary in terms of its performance difference. But I think, it's just long term. For me, when you see these big booms in Sydney, you get a lot of stories coming out and the ability to flip. But I always look at residential property as a long-term hold. If I purchase something, and this is my own personal view, that's that caveat, I purchase it for the long term and I have it for, the future family wealth is how I view it, rather than that short-term flip. And you get that in those big markets like Sydney and Melbourne, where you see these massive price cycles. But we also have to remember that price cycles always, often they overshoot and it means that they pull back afterwards. And we see that every cycle in Sydney and Melbourne, not so much consistently in our other markets. So, you know, I think it is considering the price cycle as well when you're purchasing in some of these larger markets.
Great insights. As Ben said, we could chat to you for hours, Nicola. You're the first time on the property couch. Hopefully, it won't be the last. You've clearly you got some amazing insights into this asset class. You're clearly a student and of your craft. And on behalf of Ben and I and all of our community on the property couch, we appreciate you coming on and sharing your insights.
Thanks for having me on. It's been great fun.
Thanks, Nicola.
Pleasure. There you go, Ben. Like we just had to check the time there because we had to be respectful of Nicola's time, but you said it at the end there and we could have riffed it for a lot longer.
A couple of sage pieces for me about playing the long game. I really, I like that message and her own opinion as well. She's come to that conclusion. But the other insight that I really latched onto, and we did talk about it in there, was what we've been talking about in terms of the practicality test, Bryce, and the decisions that you make around compromise, and the fact that the behavioural data on the platform, on Domain's platform, is effectively saying that I look for houses, I can't buy houses, but then I start to substitute for townhouses or larger apartments, but I hang in the same region or the same area. And I think that is exactly what we talk about.
Is there a risk of what you just said then, reinforcing that location does what percentage of the heavy lifting?
80% of the heavy lifting.
80%, yeah. So they didn't change the location; they just changed the house type. Wow.
Yeah, and we're going to see more of that. We are absolutely, and hopefully through government and feedback that this not in my backyard approach, where we are going to see more semis being built. We are hopefully going to see a little bit more density going into those more established areas, because that does make the housing stock more affordable. And I think that is something that hopefully we'll see come out in the recommendations of the affordability and supply review that we're seeing in federal politics at the moment.
But some great insights there. Renters are better allocators of the housing resources than owners, Ben. We've got the part regional reversal. There was unit prices may start to increase in certain areas. We had some behavioural economics. So there was a far-reaching interview. Again, we are incredibly grateful for Nicola to join us here today, and I'm sure that the communities benefit from that conversation also, Ben. So, hey, my life hack today is one of the reasons in that interview, Ben, I was talking about Warrnambool, because I obviously live in regional, and on the weekend I travelled just beyond Warrnambool to a place called Port Fairy with my family and some friends, and we camped around there. But the life hack is because we're moving into camping season, Ben, and one of the little life hacks that one of my friends said that they do, and Andrew and I tried it this time, was, when you're reversing the trailer, like we've got a camper trailer, so we've got to reverse it into its spot.
Yep.
And you're having Andrea's trying to guide me in, and like, if only she could hear, I can't see you, you're not the mirror. Like, I don't know where you
spending 2 months on the road, Bryce. If I can't see you, I can't take your instructions. But
then it's that awkwardness at the first hour of the setup. You've had some conflict around parking. So the resolution is really simple, Ben. You phone your partner, your significant other person who's helping you park the trailer, on the mobile phone, and they're just guiding you through. And because you've got it on hands-free in the car, and they've got it on their phone. And it was so much smoother, Ben. It was
nice.
It was a game changer. So as we approach camping season, and for all those folks who can relate, who the person who's reversing in can't see the person who's giving the directions, try that one. Give each other a call.
A little tip for beginners: just try and clarify what a little bit more means, because you may find a little bit more could be a tree or a stump. A little bit more might be 6 inches. A little bit more for someone, it might be a foot. So that's probably just for the beginners.
Yeah.
Because if you are going to use the mobile phone solution, a little bit more, boom. Oh, not that much more.
No, the other left.
Love it.
And I thought you were going to say the other caveat on that life hack, Ben, is you need a phone signal. So some of the places where you were in the north of Western Australia might not have been able to fulfill that.
bit of space out there. There wasn't too many things that you could bang into, but
So there you go, crew. As you are heading into camping season, if you've got a camper trailer or a boat or something, try that mobile phone call. Hey Ben, what's making property news?
Well, we've just listened to a whole episode of what's making property news. I will add one final bit in there, and that was the update, the RBA update and economic update that I delivered on Tuesday. Obviously, we saw from the minutes of the meeting that, yes, Governor Lowe and the board are going to hang firm on their guidance around sustainable 2 to 3% inflation level, which gives them a chance to go after real wages, which is really great. And the other one was obviously about the bond program and what's been happening in the bond market. So we did see with his firm view that it is going to be lower for longer. What we did see is that 3-year bond yield curve, the swap rate, come right back down. So it really spiked on the quarterly inflation numbers that came through in September, but it's now back down. So that's a staggering way of basically the RBA saying, look, you can try and pick which way we're going to look at it, but I would say take the long road. Don't think it's going to be anytime soon. So that was their signaling to the market to basically say that we are going to try and hold firm on lower interest rates for longer because it's better for economic results and economic productivity. And so hopefully we'll see that play out. So there's just a little update on Tuesday's update.
No, that's a good point, Ben. I didn't mention, if you haven't listened to your economic update, it's available on YouTube. It's available on wherever you're listening to this podcast right now. Have a little listen to you. It's always insightful, and you put a lot of effort and energy into that. So go and check it out. But mate, big episode, lots we covered. Again, thanks to Dr. Nicola Powell for joining us today, mate. Thanks to you. Every week you turn up, you deliver your best. I appreciate chatting with you on the Property Couch each and every week too.
And the feeling is mutual. And thank you, Dr. Nicola. We love your work. We've been admiring you from afar, so it was thrilled to have you on. And until next week, Bryce, knowledge is empowering, but only if you act on it.
Very well said, Ben. See you next week, folks.
Hey guys, Bryce here again. Just want to catch you before you go and let you know, if you're new to our community, there are a lot of episodes to catch up on, but it's really important that you start from the very beginning at episode number 1, because episode 1 through to 20 share all of the foundational pillars and frameworks that you need to know to get the best out of listening to this podcast. So I'd recommend that you start there, and the little tip is to maybe start on 1.5 speed. Now, for those of you that are time poor and don't have time to go back from the beginning, don't worry, we've got you covered as well, because we've created a binge guide that goes through all of the details and makes it easy for you to read and get up to speed very, very quickly. So if you go to thepropertycouch.com.au/fast track, you will be able to download that binge guide and you will be up to speed in no time. And whilst you're there, I've got a few extra goodies for you, because we have our top 5 frameworks that you'll learn on this podcast, as well as the Make Money Simple Again ebook, which will help you with the foundations of basic money management, so you'll have everything you need to succeed in building your own lifestyle design and getting the best out of this podcast. Now, just a reminder that anything that we cover on this podcast is not considered financial advice. We certainly recommend that you get your unique circumstances looked at by your individual advisor, and everything we talk about is just general in nature. To thepropertycouch.com.au/fast track, and you can go and get all those goodies and catch up right away.